Hi everyone, welcome to Property Matrix. I'm Hanson Culloden, Director at Culloden Finance and your host for today. At Property Matrix, our goal is very simple: to get experts from across the industry, be it property, finance and wealth, to help everyday Australians make better financial decisions. Whether you're buying your first house, investing, refinancing or building an investment portfolio, I'm sure we'll be able to add something or some tips for you throughout that journey. Also, I'd like to apologize if I'm not very camera ready. This is something new and I'm hoping to add some value to everyone out there. Thank you so much. Let's get started. Welcome to the first episode of Property Matrix presented by Culloden Finance. Today we are joined by Gaurav Bajaj from Insta Accounting. Gaurav has almost 10 plus years of accounting experience. Let me pass on to Gaurav. Gaurav, tell us a bit about yourself, please.
Thank you, Hanson. So I moved to Australia back in 2003. I did my master's in accounting. Then I went into a corporate job. Simultaneously, I also did my CPA along the way. After that, kept working and flourishing in corporate job. Between 2014 to 2016, I did masters from Melbourne Business School, and that's where they teach you about entrepreneurship. And that's where I started my own company back in 2016. So I did it as a side gig for a few years, and a few years ago, I just jumped into accounting and taxation full time.
Amazing. Very humble out there, Gaurav, but it's a lot of experience I see. Tell me, what's the biggest misconception when it comes to accountants?
So the way individuals and small business owners treat accountant as just a compliance obligation, and they just think that accountants are here to do tax return based on historical data.
Yep.
Whereas where we come into picture is basically we focus on future growth. We build active structures for the clients, how to buy a property, what structure should it be. We also focus on asset protection for the clients. We help them with their cash flows and commercial decisions.
Yep. So it's not just reaching out to an accountant when it hits June and July and I want my returns done. It's not just that, right? It's a cycle. It's a life cycle where you are always there for your customers.
So with time, the role of accountant has also changed.
Yep.
So we just don't take the data, plug it in. There is no value add. So that's where we kick in, help with the value add, help with the structure, help with where to and how to save tax, and give them ideas and do tax planning as a whole. Whether it's individual or whether it's small business or whether it's people with multiple businesses, we always come into picture and help the businesses focusing on future growth and how to be tax compliant.
Amazing. Thanks, Gaurav. Thanks. I'll start off with our first question, right? And this is something that's on everybody's mind: the budget. Tell us a bit about the budget. What's your opinion? What was your breakdown of the whole budget?
So at end of the day, everyone, including me and you, we want more money in our pocket.
100%. Give me more.
So what everyone wants is basically lower marginal tax rate.
Yes.
So you know how our tax structure is broken into 0%, 10%, 30%, 45%, 37% in between. So basically what we would ideally like to see is drop in the marginal tax rate. So everyone becomes happier because once the marginal tax rate drops down, everyone gets more money in their pocket.
Yep.
Along the same note, government does a lot of schemes where they provide immediate tax relief. If you would have noticed, we saw immediate tax relief last year with electricity bill. Now they have also come up with car registration.
Okay.
If you guys have not opted for that 20% car registration discount, you can, or car registration policy, whatever you can call it, you can log on to one of the ATO's or government's website, search on the net, and you can get 20% reduction on your car registration fees. So government do come up with all these instant relief items, and that's where we get to see more money in the pocket. In terms of the budget for new budget where they are targeting reduction in CGT discount, it's actually the reduction is there, but it's indexed. So instead of losing 50%, we only pay tax on 50% capital gains if the property or any asset you are holding for more than 12 months. It's being changed to indexation. So if inflation is higher,
Yep.
you may be better off. Who
Perfect.
knows? If inflation is lower, you may be worse off. But at end of the day, we don't know what future entails. So, but if you look at overall CGT discount, it's still there.
Okay.
Instead of losing 50%, you are getting indexation benefits. So overall, over a long horizon, it's actually not that bad.
Perfect. So it's not a whole head and groom. Awesome. Moving on, Gaurav, tell me, I'm sure you see a lot of customers, right? And I wouldn't want you to share one particular scenario, but what are the basic budgeting mistakes you see people make, and how can we help them overcome it?
Great question. So think it that way. We use tap and go.
Yep.
So we don't psychologically realize that we are spending that money unless you are giving it on a cash. It's easy spend. Similarly, everyone's credit card, you would notice a lot of subscriptions.
Yep.
Whenever we receive pay, all these are direct debits scheduled on our credit card.
Okay.
What we don't realize is that we also need to do some savings. So make it as a forced saving. Some percentage of your salary, whether it's 5%, 10%, 20%, put it against in a separate account. That's forced saving, like you would pay your normal bills. So over the time period, that adds up. And you can buy a property, invest in shares, whatever you can do with that money. All these small things do help a long way.
And do you help your customers with this budgeting part as well when they come to you?
Of course we do. Depends on what they want at end of the day. So whether they want just tax return, they want tax planning, they want to buy a property, what growth do they want to see in next few years?
Awesome, thanks. I think next is moving on to my favorite topic. How can an accountant help someone buy a property or buy their first property, which is every Australian's dream, right? Buying your first property. How can an accountant come in there? We already spoke about budgeting and everything else, but how do you put everything together and help that customer?
So there are few ways. So property can be bought for an investment.
Yep.
Or it's the first homeowner who buy the property. So to answer that specifically, if it's first homeowner, so we look at their spend, whether it's individual or whether it's someone is doing a small business, a sole trader, we don't know at the start. So let's take a typical example of someone on PAYG, which is someone working on TFN. So government does have a lot of incentives nowadays. They have got 5% scheme. They also have another option where they co-invest as a buyer. So as early you can get into the property, the better it is, because over the time period, property prices go up. Start saving from day one from property as soon as you get a job. And then 5% deposit, increase that to 10%, buy a property, get into the property market as and when you can. Earlier, the better. So you can still plan your holidays. You can still go and visit the world wherever you want to go. But small bit of savings does help a long way.
Amazing, thanks. What was the feeling to you, Gaurav, when you bought your first property? I know you're an avid investor. What was the feeling like?
So when I bought my first property, that was almost 20 years ago.
Wow.
At that time, even 300K loan feels like it's $3 million loan, because that was 20 years ago. So when I signed the first contract, my hands were shaking that how I'm going to pay off my 300,000 loan back then. I had some savings, put that savings. Then first couple of years, I could see everything was going towards interest. The loan balance was not reducing. Then started forcing in some money instead of monthly installment, change it to fortnight. So that means every year I could pay 2 extra installments in there. That helped. Then property prices went up, took equity out, bought another property. And then once I bought my second property, then I realized that buying a property is a phenomena. It's not just you buy just one house and just stops there. When you get equity, go on to the next one, then to the next one. That's how you create property portfolio.
Amazing. So what I take from that is save up for your first house, save as minimum as 5%, check the government schemes, see what's available for you. Once you get the home loan, start trying and paying extra. Pay the loan down as much as you can. Hopefully the market grows, you build some equity, buy a second property and grow your portfolio, right?
Absolutely, spot on.
Amazing, thanks. I think your hand was shaking because you didn't have a good mortgage broker. I'm here now. Okay, let's move on, Gaurav. Let's move on to we spoke about PAYG customers. Let's talk a bit about our business customers. I'm sure there would be a lot more requirements for a business owner from an accountant's perspective. Where do you help out in that?
So to all my business customers, I tell them we got to start approximately 1 year in advance, because they have got their profit and loss account, whether they are on salary from their own company. It depends on how they take money out of their own company, whether they are taking it through your salary, through your dividends. We have to plan 1 year in advance, clean their P&L, clean their balance sheet to see whether there is any director loan, etc., etc. So historical profit is not enough. We got to have a forward plan.
Yeah.
So we need their business cash flow. We need to plan accordingly, that how do we pay them, how do they take money out so that they can get serviceability for the loan.
And there's a lot of planning and structure involved in that. Given we've been working together for quite some time, we've seen customers who have come to you, who have had bad experiences or bad advice from somebody else showing X amount of losses and then banks declining loans. I think it's the structure from day one, setting it for the future, right?
So if you come to me one day, your company is running at a loss and say, guess what? Our company is showing minimal profit. You don't even know where your money is going. How are you going to get the loan?
Amazing. Thanks. Gaurav, what financial habits build wealth over time? You can give us 20 years of experience of owning a home. So I'm sure you can give us some tips on what are the good financial habits that build wealth over a long term.
So first I'll go with is the savings. So every time you get your pay, bank some amount in your savings. Increase your investment, whether it's in property or in your shares portfolio if you have got one. Keep investing bits and pieces every month, week, even if it's $100. Start contributing to your superannuation, even if it's $100 a week, a fortnight, whatever you can afford. So every $100 putting in superannuation every week gets you additional 5,000. Over a 20-30 years horizon, that turns into hundreds of thousands. What I would also suggest is keep an eye on your bills, your whatever you spend. So a lot of the time you just focus on your monthly bills, but sometimes some bills are quarterly or yearly. You don't plan for those bills and suddenly you get it, I've got to pay this $2,000. So make sure every month once you start keeping money aside that I've got to pay this registration or insurance or whatever that's yearly, you plan it in your monthly budget.
Amazing. So what I take from this is the compounding effect. You spoke about the compounding effect, no matter where it is, if it's in your shares, $100 doesn't seem a lot today, but over 5 years, it will build you something, right? So you've spoken about the compounding effect where, for example, you put in $100, it might not seem a lot today, but in 5 years time, it will compound to something and, it will give you a return. You've also spoken about building up for not just daily or monthly expenses, but the yearly ones. Like I know one which catches everybody off guard, including me, is registration. $900 all of a sudden. I'm like, oh, where did that come out of? So building and saving for that from day one. Now, amazing. Thanks, Gaurav. One last question. We have to come back to property. We have to come back to first home buyers because honestly, we all love first home buyers. We want more of them to get into the market. We want more of them to get their first house. What would be your advice to a first home buyer in 2026?
So with the latest budget announcement, you would have noticed that the property prices have started to reduce. So probably this is the right time to buy a property, especially for first home buyers. And first point of contact are mortgage brokers. So you reach out to mortgage brokers, find out what all schemes are available, whether it's less or no stamp duty if they buy apartments, whether it's 5% government scheme is there with your deposit, whether you can take money out of your super to buy a property. So reach out to your mortgage broker, maybe Hanson in this case.
Thank you.
And ask them all the available schemes and check your serviceability.
Perfect.
So that's the starting point.
No, amazing. Thanks. Anything you would like to share to our viewers, Gaurav? Anything in regards to your accounting firm? We'll surely put your details at the bottom so people can reach out to you. But any last words to everyone?
Don't consider your accountant as just a person to do your historical paperwork to do your tax return. Consider an accountant as your strategist, a tax consultant, a tax advisor who can guide you towards your future growth, maximize your cash flow, and prevent your major tax liabilities early.
Amazing. Thanks, Gaurav. It was really, really good. We really appreciate your time, and hopefully everybody gets something out of this episode. Look forward to seeing you all again soon.
Thank you, Hanson.
Thanks.